Howdy guys, welcome back to my YouTube channel. We're going to run through the weekly fundamental analysis for the week, and we're also going to go through my March results and how I did performing in March. Q1 has finished. We are profitable for this quarter in the sense that from a risk to reward standpoint. Unfortunately, because of position size errors, we're not actually profitable from a economical monetary side, but nevertheless we'll go through March results for this year. Let's just go through the fundamental analysis first. So 24th of March to the 30th of March, just a FYI guys, as always, this is not financial advice. Please do your own research, make your own informed decisions on the markets and your investments. COT reporting, we have had, again, the yen still favored bullish from COT, from big, large money. We also, interestingly enough, have oil accumulating as well. USD was neutral, Aussie was slightly bearish. So something to take note of for my yen crosses. I may look to short in favor of the yen against UJ and AJ as well. Also, gold, still very much long biased. I would say it's a neutral reading. Silver as well, very neutral reading, but still very long favored in the long term. US data. Some interesting economic data for this week. We had PCE being hotter than expected. Still overall net, the CPI is coming down, but there is that element of sticky inflation, stagflation at play. Also, in terms of USD, we had better than expected GDP, which is definitely a good sign. Consumer confidence was cooler than expected, but was revised up for last month, so I sort of had that as a neutral reading. Overall, we're still net bearish on USD, but slightly less convincing, just because the economic reading now has turned neutral in my point of view. Aussie, we've had Aussie CPI print being lower than expected. Again, a bearish reading for Aussie. We do have cash rates for Aussie next week, so it'll be interesting to see what happens out of that one. And the yen, we had Tokyo CPI being hotter than expected. We have services PPI being cooler than expected, but revised up from last month. Overall negative, but that Tokyo core CPI being a very, very important print. Hotter than expected, quite bullish on yen, especially with the COT reporting. So core PCE, you guys can see we've got that element of stagflation that's coming up on a month-to-month basis. On a year-to-year basis, we're sort of flatlining around that 2.5%, but definitely we have elements of stagflation for this 2025 start. And then just also adding on top with Trump and his tariffs, many are speculating that that's going to increase inflation and CPI based off, being unable to import goods, having cost of things being more expensive in the actual US of A. We had GDP as well. Now, although GDP was hotter than expected, it is definitely lower than the previous current readings. This is bullish for USD, but again, I can definitely appreciate we are in a risk-off environment, or at least that's what my fundamental analysis is telling me. We are risk-off. We're favoring the yen, we're favoring gold. Stock and indices are going down, so we're really in that risk-off environment, and I'm going to take that approach until said otherwise. Consumer confidence has gone down again, promoting that idea of risk off, no confidence, no investments in US economy. Okay, moving on, we had this week's data. I did want to speak about consumer confidence and GDP because I think that's a very interesting segment, and both two readings paired together are quite interesting. So for consumer confidence, we had the fourth consecutive month of decline. People are having more of a negative outlook on the stock market. There's loss of confidence that sticky inflation, Trump tariffs, gold being, having its all-time highs right now. which is all painting this picture of a weak US dollar. However, when we go GDP readings, they were hotter than expected. This fourth quarter reading reflects increase in consumer spending and government spending that were partly offset by decrease in investment and risk-off environment. And what I've written down is we may be in a potential bear market right now for US stocks. This is conflicting agenda from the consumer confidence and the GDP. So for that main reason, I will be on the sidelines for USD pairs until we have earnings, average hourly earnings, NFP and PMI readings next week, which will give me a better understanding of how USD is actually doing and which side I should be on. Yen, we had Tokyo core CPI, which the cost of living in Tokyo rose more than anticipated, rate hiked slightly. This paired with the sentiment of a risk-off environment that I believe is happening, I'm very bullish on the yen. I will be trading the yen pairs. Next week, we have retail sales for Aussie. We have cash rates as well. We've got that JOLTS, NFP, average hourly earnings. So very key week next week for us, start of April. In terms of my bias, COT reporting for gold and silver were neutral. Economic news overall bullish. My bias is overall bullish. But in saying that, we are going to favor gold. I think gold has a better fundamental backing to it. I also think gold looks better technically right now, so we're going to just stick with gold. We're not going to get into silver. Now US 30, I do want to actually look for setups for US 30. COT reporting is bearish. Economic news right now is bearish. My bias is strongly bearish. We are in again, I believe it's a risk-off environment. With US 30, look, if NFP comes, it comes hotter than expected. They think that the labor market's doing better in the US. That might take out my stop if I do get in a trade, but at the end of the day, again, risk is calculated. And if we do have this, if we are right on our bias, we just got to make sure that our risk to reward is favored so that we can make more money than if we lose money. So there's short trades available for US 30. AU, neutral on both, not going to trade it. UJ, neutral on USD, not going to trade it. AJ, on the other hand, definite weakness in Aussie. Inflation numbers coming down. Employment numbers not doing too well, I think, as well. And then we had slight strength in yen, which is a hot CPI print, risk-off environment. Yeah, I'm taking short trades on AJ any day of the week. So that's my bias for the week, guys. That's the fundamental analysis for the week.